So we're a month in, and at first glance 2024 for the entire luxury watch industry seems to have been, well, pretty rubbish. Headlines of plummeting profitability of some of the largest watch retailers in the world, mammoth January bargain basement discounts being offered on top brands, and backpack grey market dealers dropping off the scene like flies. It doesn't exactly set a great foundation for the year ahead, but how much can we read into those headlines as an indication of what is to come? Is this the beginning of a new era of AD discounting? Will Rolex join that party? And taking into account expert economic projections and the impact of forthcoming political events, what is my forecast for grey market pricing trends for the rest of the year? Hi guys, welcome back. I'm Vinny. If you're new here, a former accountant turned watch dealer. First off then, to what extent can we look at the Watches of Switzerland Group's recent financial report as an indication of their potential future performance and the overall general health of retail watch sales? Let's have a look at the headline then. The share price of Watches of Switzerland has divided by more than a third in one day, reportedly wiping 560 million off its market capitalization. This came after the company said full year revenues would be £100 million below expectations. Now, it explains in the report that they have attributed this underperforming year down to a slowing of luxury watch sales in general and the luxury sector. The luxury sector has slowed down to 5% growth this past year in 2023 in comparison to the previous 2 years before that, where growth of the luxury watch sector was in double digits. Now let's break that down, because the headline actually reads that Watches of Switzerland Group shares have dived by a third after revenue warning. Yes, revenue warning. The expectation is that in 2023 their sales were £100 million less than forecast, than predicted. That doesn't mean that sales have fallen. The expectation of the industry in 2024, according to Bain, is that the growth in the whole luxury watch sector will be around 4%. So that is still growth. And of course, we've got to remember that this report is based on historic figures. So we're actually talking about the performance in 2023, which is never an indication of future performance. 2023 growth slowed to 5%, which is still growth. Growth in the previous 2 years, which the forecasts were originally based on, were in double digits. Now that isn't normal in any sector or in any business, for a mature business anyway, to be growing in double digits every year. Yes, the expectations are not as high as they were before, but we've got to remember that the hype bubble that was created 2 years ago was an isolated anomaly. And it might happen again, but it certainly isn't the norm. And also what we've seen as well is the major brands, the major watch brands, have been on this rally of increasing retail prices almost on a quarterly basis. We know that we've just witnessed another price increase at retail from Rolex. So that is, I think, part of the problem. People have less disposable income to spend because of the state of the economy, because of interest rates, because of mortgages going up and the cost of borrowing going up, which means that less people are going out and buying things they don't need, like luxury goods. You would have also seen in the intro as well that there's been some absolutely colossal sales at the Watches of Switzerland Group in January and other ADs across the country. Discounts on watches up to 40%. One particular sale that springs to mind is with Watches of Switzerland Group. They had 20% off major brands like Omega, Longines, Tissot, Doxa, Breitling, Panerai. All of those brands were in the 20% off sale, and on certain watches there was an extra 20% off on top of that, so up to 40% discount. These are numbers that we haven't seen in discounts for luxury watches in many years. You know, I also came across another AD that was advertising hype Omega watches, the Omega No Time to Die James Bond edition, at a 20% discount. This was reduced with the NATO strap to around £6,500. We've got the solid gold Speedmaster, I think with green dial, had tens of thousands of pounds slashed off the price tag. You know, that was quite alarming to see that on Omegas, which would obviously for many years, the past few years, trying to keep at pace with Rolex. And Part of the biggest problem with Omega is they follow Rolex, the trend of Rolex with all of their retail price increases. I mean, I said in the previous video, an Omega Seamaster, which used to be a £3,000 watch at retail, is now £5,600. So this is part of the problem. They've really dug themselves a grave, which they're now trying to climb out of by increasing the prices so much that they're pricing themselves out of the market for the consumers of which they were tailoring for before. Now, the other question I keep getting asked is, will Rolex join in that party of big discounting and participating in AD sales? I don't think in 2024 we're going to see that happen yet, certainly not overtly. But I was advised by a viewer of the channel who's got a good relationship with an authorized dealer here in the UK that he's spoken to his AD, and apparently they had 5 solid gold Submariners around the back which were not accounted for. There was nobody that they had on a list to buy any of those watches, so they were just sitting there hoping for somebody to walk in. They weren't going to put them in the window because that would damage the brand and it would sort of ruin this illusion that all Rolexes are impossible to get hold of. He also said they had 2 solid gold Sky Dwellers in there, and I'm sure they had many ladies' pieces. How are they going to sell those watches? Well, if somebody shows or expresses an interest, I am sure that now is the time that you can start asking the question, right, I'm interested in this £35,000 Submariner, solid gold. Can you give me a discount on that? What kind of a discount can you give me? Now is the time to start asking, guys. If you don't ask, you don't get. And I think if they've got those pieces sitting in the back that they're actually struggling to get rid of, if you're in the market to buy one from an authorized dealer, then yes, discounts, I think in a few cases, can absolutely be had now at some Rolex ADs, but you've got to ask the question, and it's got to be done secretly because they're certainly not going to participate in any major sales. Now, look, you will know that of course I am a dealer within the industry, so I'm well positioned to comment on the things that I'm seeing, the things that I'm witnessing within the market and within dealer networks. And what I would say, where grey market pricing is concerned, there is a race to the bottom. What's happening is that dealers like myself are buying, let's say for example, a Submariner Starbucks. So that's a roundabout trade price, sort of £12,000 now on the secondary market. If I buy that piece at £12,000, or any other dealer buys that piece at £12,000, and it's taking a few weeks for that to sell, 3 or 4 weeks, I'm not getting that many bites. The majority of the messages I'm getting in my Instagram inbox are for people selling watches more than people buying watches, and that hangs around, and I sell it, say I make £500 on it. The next one that I'm going to want to buy, because that wasn't easy to sell, because it took a while to turn it over, the next one I'm going to want to buy has to be purchased at even less than the £12,000 I bought the last one at. And that is where the race to the bottom comes in, because there is a real hesitancy with a lot of dealers, and also a lack of confidence in holding any piece within their inventory that it will sell quickly enough to avoid a further slip in values. Fast turnover is king in this industry, and dealers want, with their own skin in the game, their own money of course, because time is a different thing altogether, but with their own skin in the game, they want to be able to buy a watch, sell it within a few days, and then they will feel confident enough to go back to the market and buy that same piece again at the same price than they bought it for before. And that is the whole pressure on what is driving pricing on the secondary market. So at the moment, what I mean by a race to the bottom is that the pressure is downward. Because we're not seeing enough demand and supply is very liquid, and we're getting a hell of a lot more messages for people trying to sell watches than buy them, I'm looking to buy that next one for cheaper than the last one, which means I'll be selling it for cheaper than the last one. Now, what will arrest that race to the bottom? And I think this all ties in with the economic situation. Now, the biggest problem at the moment is the economic situation. The core, the source of all of the issues is specifically interest rates and the cost of borrowing. Inflation is what has caused high interest rates. Inflation has come down considerably in the UK. It now sits at around 4%. We've got the Bank of England have still got a set interest rate which is quite high of 5.25% here. Now that base rate is expected to be reduced soon. So economists predict that the Bank of England will reduce that rate in April and then successively months after that as well. Now when that happens, what essentially will happen is the cost of borrowing will come down, so the cost of car loans will reduce on a monthly basis, and mortgages as well will also reduce on a monthly basis. Now this will take a few months for those effects to filter out, so I don't think it will be until the back end of the year, the final quarter of the year, when we will see people actually going out, spending more money, and that's when we'll see more people coming back into buying luxury watches, and then that slide or race to the bottom will be halted and reach a stasis, and potentially prices could go back up again. Now here in the UK we will have a general election. It's predicted around November time, and we know in the United States that their election will take place at the end of the year as well. So it's a big year for the global economy, and with major political events like that, it does add some sort of volatility to global financial markets. Now usually when an election comes, the incumbent force in power in the UK, that's the Conservative Party, they tend to give out more money. There tends to be tax cuts, there tends to be greater handouts, so that the electorate can have a greater feel-good factor, and basically to boost their approval rating and increase their chances of being re-elected. Now that root problem or source of the problem of a poor economy is inflation, and in the US that's already fallen. Actually it's a lot lower than here in the UK. It's fallen to 3.2%, and that is also forecast to fall throughout the year. What also is going to happen is the election in the US. We're expecting to see a rematch of Trump versus Biden. Those two politicians obviously are on opposite ends of the political spectrum, and either one of them, according to Goldman Sachs, will have a massive market impact. So they report that a Trump win on one hand could mean that there is lower taxes eventually, which would have broadly a positive impact on equity markets, which will be positive for the economy in general. And on the other hand, with Biden, if he gets re-elected this year, then we're expecting to see corporation tax increases, which will be negative on the markets. So it depends what actually happens there, but generally in the build up to an election, which is going to be what 2024 is, it is always a positive thing for the economy because there are boosts given by the incumbent leaders. And that means, of course, that luxury goods and other retail sectors should benefit from that positivity. Anyway, guys, let me know what you think down in the comments below. Do you agree or disagree with me? I'm always interested to have a debate with you down in those comments. Go check out beatthewaitlist-watches.com, and I'll see you next time.